Today, you're going to be seeing a comparison that nobody on YouTube is talking about at all. And the two companies that we're going to be discussing is none other than a company we've discussed many times previously on this channel, which is Castellum CTM, and the closest competitor, direct competitor that I could find as of this very present moment is none other than ticker symbol DLHC. So both operate in federal technology and defense support. But when you actually break down the financials, the differences become very interesting because when we look at things like revenue growth, margins, cash strength, and backlog, these companies clearly look stronger right now. One of these companies clearly looks stronger at the very moment. You'll see a distinction when you compare both the companies. And if you are interested in small government tech stocks, this is a comparison video that you definitely don't want to miss. Now, if you do enjoy comparison videos, like I've done in previous videos with Castellum CTM, comparing them to other companies in the same field as them, please feel free to comment below exactly what it is you want to see in upcoming videos in relation to growth stocks, quantum stocks, Castellum CTM, anything you guys want to see. I respond to every comment, and I'd be more than happy to give the video that you guys want to see. Now, first and foremost, we've talked about Castellum a bunch, and we're going to talk about them again today. So what I want to cover first is let's talk about the actual company that we're comparing to Castellum CTM, which is DLHC and ticker DLHC. Now, DLH Holdings Corp, that's actually the name of it, DLH Holdings Corp, is a government services contractor that mainly focuses on healthcare research and technology services for federal agencies. They work with agencies like the Department of Veteran Affairs, Department of Health and Human Services, and military health systems. So instead of building hardware or cybersecurity products directly, DLHC focuses more on support services, research analytics, and health-related technology programs for the government. Now, keep in mind, when I said this is the closest direct competitor I could find, because some CTM is in a very niche, they're very niche to the market that they're in relation to cybersecurity. So there's going to be differences in their business model. So I just want you to keep that in mind with this comparison video. Now, the way you should think of DLHC is more of a government healthcare and IT services contractor. So let's actually look at the financials of this company. So first and foremost, ticker symbol DLHC. Their annual revenue was at $344.5 million, but compared to the previous year, which was at $395.9 million, revenue actually declined about 13% year over year. So right away, you can see that DLHC is currently experiencing shrinking revenue year over year. When we talk about the margins, DLHC reported a gross margin of just 4.87%. That is extremely small, and that cuts them thin, especially for a company of with that type of revenue. And for government contracts, margins can be tight, but under 5%, extremely thin. Now, this means that most of the revenue they generate gets eaten up by operating costs. That's not a good thing. And when you look at the balance sheet, total assets is $290 million and total liabilities at $177 million. So they still have positive equity, but leverage is noticeable. And one number that really stands out is the cash. DLHC reported only $125,000 in cash and cash equivalents. For a company doing over $300 million in revenue, that is extremely small liquidity. And I want to keep you guys in mind, when I read the reports, I did look to see if it said it was in the except in thousands, amount in millions, all those numbers. I did clearly look, and I was surprised with the thin cash they had. Please correct me if I'm wrong in the comments below. If you do see that I made a mistake, I'm happy to admit when I make a mistake. But what I found in the report was very small amounts of cash at $125,000. Which is very small for a company making over $300 million in revenue. Now, their backlog is interesting, though, which I want to take into account, because instead of reporting backlog in dollars, they reported the weighted average contract duration, which is at 6.4 years. So they clearly have long-term contracts, but investors don't get the exact backlog size. But even though that they have very small cash, at least they have that runway at least they have that runway to work with, even though that the amount of cash they have on hand is very razor thin and the margins are thin. At least they have that. So I just wanted to put that into perspective as well. And if you enjoy these types of financial breakdowns comparing smaller companies, please feel free to let me know in the comments below. Now, let's get into the company that we've actually discussed many times previously, which would be none other than Castellum CTM. We can see the price action. They're trading at 82 cents at the moment. And we look here on the prophecy I have, they do have bullish expectations from a technical and a fundamental analysis perspective. And Castellum operates in a different part of this government technology space. CTM focuses heavily on cybersecurity, electronic warfare, information warfare, and defense technology. These customers include U.S. defense and intelligence agencies. So, while DLHC focuses more on health and research services, Castellum CTM is much more focused on national security and cyber defense. This makes CTM position closer to the cybersecurity and defense technology market. Again, DLHC and CTM are not exactly the same, but they're the closest comparison for direct competitors, for direct competition I could find at this very moment. Now, after discussing a brief summary and a brief recap on what Castellum CTM does, who they are, Castellum, when it comes to their financials, as we've discussed many times, annual revenue was at $52.9 million. Now, compared to DLHC, this obviously is a much smaller company. And even from a price action perspective, we saw that DLHC, again, today, Castellum closed at 82 cents. Technically, if you round up, this to 83 cents, but who cares? It's not that big of a difference. And when we look at DLHC, again, they're at $5.76. So it's a much smaller company. But the thing that gets interesting when we do compare them, again, even though that they're a smaller company, they're not declining. They are growing year over year, and they have a revenue increase year over year at about 15.2%. And while DLHC revenue declined, CTM is currently growing to the upside. Now let's look at the margins. CTM reported a gross margins after doing the math was at 36.64%, compared to DLHC's very thin razor margins at 4.87%. That is dramatically higher, even for a company much smaller in scale. And that suggests that CTM services may be more specialized and of higher value. Now, let's talk about the liquidity. Castellum reported about $14.9 million in cash. That's roughly 28% of their annual revenue, which is actually very healthy liquidity position for a micro cap company. And even though we're talking relative to size, the amount of cash they have on hand is, even for a smaller company, is bigger and accounts for more of their annual revenue in a much bigger scale than the company that is at a bigger scale in ticker symbol DLHC. Now, the number that stands out the most is the backlog. Now, again, DLHC did have a good runway with their backlog, but so does Castellum CTM. CTM reported a backlog of $216 million. To put that in perspective, that backlog equals roughly 415% of their annual revenue. So if those contracts are valued successfully, CTM already has multiple years of revenue visibility. Now, when you compare these companies side by side, DLHC, ticker symbol DLHC, has much larger revenue. Revenue is currently declining, very small margins, extremely low amounts of cash. Castellum CTM, smaller company, revenue currently rising, much higher margins, strong backlog relative to size. Now, that doesn't automatically mean CTM is the better investment. Again, I am a holder of CTM stock, and I do own shares of the company in my portfolio. And again, even though the tone of my voice and everything, the way I'm coming off, is very bullish and optimistic towards CTM compared to DLHC, that does not mean we marry a stock. And I'm being very clear, just because I'm more bullish on CTM and what I say is irrelevant to what the stock market says, because this video alone and my thesis is not black and white, in the sense that since all of these metrics are in place, CTM is the better investment. Because in the future, even though you make the best educated decision, you never truly know what's going to happen within a 5, 10, 20-year period. Now, again, that doesn't automatically make CTM as the better investment, but does show how different the financial structures of these two companies are. Now, I want to ask you, Which company looks stronger to you right now, DLHC or Castellum CTM? Let me know in the comments because I read every single one. And if you want more breakdowns of small government tech and cybersecurity stocks, make sure you subscribe because these are the kinds of companies most investors completely overlook. So again, InvestQ out. Happy to do these videos. Keep making good decisions for your portfolio in the long term, and I'll see you all in the next video.